Ghana charges ex-finance minister after collapse of bank. Morocco's unemployment rate slips to 9.2% in 2019. Angolan State Diamond Company says it's preparing for an IPO. Thank you for joining us and welcome to Business Incorporated. I'm Chimeze Obi Iwagu. Teeing off with the intraday numbers. It was all green here in Africa as all the markets we track tilted to the north at intraday. The Nigerian stock index reversed the negative trend to go up 0.78%. The JSE index went up 0.36%. In Egypt, the EGX 30 also was up 0.83%, leading gainers in the region. Nairobi SE closed in the positive territory on Wednesday. And most major Gulf stock markets slipped at intraday after a slew of poor corporate earnings, with Qatar's index falling the most among regional equities. The Qatari index dropped 0.90% to a more than two-month low. United Development slumped 10% after reporting a nearly 16% drop in its annual profit. The Gulf's largest lender, Qatar National Bank, lost 0.9%. Saudi Arabia's benchmark index ticked down 0.64% as lender Bank Saudi France dropped 5% to become the top loser on the index after it missed full-year profit estimates. In the UAE, however, the Abu Dhabi index edged up 0.13%. Dubai's index was flat. Lender Emirates MBD slipped 1.1%, while Emma Properties rose 1.3%. And in Europe, markets advanced in the morning as earnings dominate investor focus and fears over the coronavirus outbreak start to fade. Meanwhile, China announced on Thursday that it will have tariffs on hundreds of U.S. goods worth about $75 billion. Let's talk to Chelsea now. Hello, Chelsea. Good afternoon. Well, China seems to be downplaying fears that the recent coronavirus outbreak would stop it from following through on the trade deal it signed in January with the U.S. Yesterday's announcement that it will cut tariffs on $75 billion goods in U.S. imports. Is this more convincing for investors?
I think it is so far. We saw a pretty big jump in Asian stocks, and here in Europe, stocks continue to sort of extend on this rebound they've seen over the past couple of days. This had been a big concern for investors. This trade war has been ongoing for so long, and it was really a big moment and a big relief for the markets in January when they signed this trade deal. And over the past couple of weeks, as the impact of the coronavirus has really spread and thrown into question the health of the Chinese economy, there has been a lot of doubt whether China would be able to follow through on the commitments it made last month. So I think the fact that China is committing to lowering these tariffs is, for investors, a good sign. They also are really hoping that the reduction in tariffs will help boost the Chinese economy, as the U.S. is also going to be cutting tariffs on Chinese goods on February 14th. So I think this could certainly help cushion the blow to the Chinese economy from the spread of coronavirus. But I think broadly, it's for investors, it's important to know right now that there isn't going to be a re-escalation in the trade war at a moment when China is so vulnerable economically. So I think that's one reason investors are feeling quite confident today.
On the data front, things aren't looking any better for the German factory sector, as new data on Thursday showed manufacturing orders unexpectedly fell in December. Is there any hope for a turnaround soon?
I think the hits really keep coming for the German manufacturing sector. This report we saw today was from December, when confidence had really started to improve. The U.S. and China were moving closer to a trade war. The coronavirus outbreak had not happened yet. So the expectation had been for a small increase in factory orders that month. They fell by about 2%, which is a very dramatic miss in terms of orders. And if you think of where we are now with the spread of coronavirus really dealing a blow to the German manufacturing sector, it's really hard to imagine this rebounding anytime soon. And that's obviously going to pose a big problem for the German economy, which is so dependent on the manufacturing sector, but also the broader European economy.
And calls are growing to shorten the European trading day, with a new survey out from Bloomberg showing strong support among traders and analysts for cutting the trading day from 8.5 hours. Are traders in Frankfurt on board on this?
Most traders that I talk to are pretty into this idea, I'd say. Europe has one of the longest trading hours among the major exchanges. The US trading hours about 6.5 hours. Asian trading hours are generally much lower than that. So there is obviously this is much longer than other trading days, but there also would be benefits to doing this. It's obviously in terms of workplace or work-life balance, this would be a big improvement, but there have always been concerns in the European trading day that it's too long and that it spreads out liquidity too far among this period, and that a lot of the orders end up getting concentrated in the last 2.5 hours of the day. So a lot of the argument that these trade associations that investors and analysts are making right now is that this would really improve the functioning of the markets. It would make it cheaper. The trading costs would go down. Liquidity would be better, and it would also be better for workers, and especially working mothers, other people with childcare needs. It would really help improve the diversity of the workplace as well. And I think that's one reason why this is really starting to gain ground. A lot of stock exchanges in Europe have said they're considering it, but no big steps so far to really implement an idea like this.
All right, Chelsea, one more day to go for the week. Let's keep tracking the market. Enjoy the rest of the day. In the UK, the FTSE 100 share index rose in the morning after China announced that it would have tariffs on some US products. The index was up in early trading. Let's get details from Juliana. Hello, Juliana. Good afternoon. Now, are the London markets still looking good at intraday after the early gains?
Well, Chimeze, good afternoon. The equities are in positive territory, although they have lost some of the momentum from early trading. At intraday, the FTSE All-Share is up 0.27%. The FTSE 100 is up by 0.25%. The FTSE 250 is up by the same amount. In currencies, the British pound is down on the dollar by 0.29%. Also down on the euro by 0.34% and down on the Japanese yen by 0.27%. It does appear as if the world has come to grips with the coronavirus, which is pushing sentiment earlier this week. And yeah, positive territory for the equities market today.
Absolutely. Well, there are other corporate news on the wire getting investors' attention aside from Royal Mail.
Well, Royal Mail seems to be the dominant story in the UK at the moment. That's been dragging down the domestic market. Early trading, they were down 7%. It's increased. At intraday, their shares are down 9%. And over the past 12 months, Royal Mail have lost over 30% of their value. And that's really because they're in a really stiff competitive market. 2019 was a terrible year for them. There were lots of unions taking them to task because of workers' pay and workers' conditions. Plus, it is a 500-year-old company, and they are starting to notice the pinch of people not sending letters, but sending mail. So they announced their year to 9 months profits, and that just gained 1%. Although their overseas revenue has climbed 11%, and that's the push. That's where they really want to go. They want to make themselves an international courier. In other very brief news, I would say what else is dominating is Weiner, the CEO of LinkedIn. He has announced he's stepping down as CEO after 11 years. That's a huge story because in Silicon Valley, he was seen as one of the best CEOs. He's overseen quite a few things, the IPO, which happened in 2011. And then there was that $26 billion takeover by LinkedIn in Microsoft in 2016. And he survived all of that. And he'll be leaving at a time when social media has really changed the game. There's a lot of scrutiny happening, especially when it comes to Twitter and Facebook and WhatsApp. And LinkedIn managed to kind of stay above that curve. So a lot of people will be sad to see him go and will really want to see the shape of LinkedIn in years to come.
We'll watch and see. Anyway, let's talk about the one that affects you, Juliana. Your average water and sewage bill is set to drop by £17 a year. Is that a good news for you?
That is good news. I suppose that £17 will at least let me get some lunch and coffee in central London on one day. But no, look, this is really good news. And Ofwat, the water regulator, they've been coming under increased scrutiny for not being tough on water companies in the UK. The market is quite loosely regulated here. So year on year, they've been seeing increases in consumers' bills. But water companies haven't really been doing an increase or giving a better service. There have been really popular, or not popular, I'd say kind of infamous leakages that have taken place across London in the southeast in recent years. And so now the water companies say they'll be giving back to customers by decreasing their bills. And also as well, they want to help those who are finding it tough to pay. At the moment, there are about 170,000 vulnerable people that receive discounts on their bills. And over the next 5 years, water companies say that will be increased to 4.5 million. So yes, that £17 will be in the back of my pocket.
Interesting and good for you Londoners. Anyway, enjoy the rest of the day. See you tomorrow. And stocks in Asia jumped today as investors in the region reacted to positive development on the US-China trade front. Beijing said it would have tariffs on hundreds of US imports from February 14. The adjustment would apply to about $75 billion worth of imports from the U.S. that China slapped with tariffs on September 1, 2019. Mainland Chinese stocks were among the biggest gainers of the day regionally following that announcement, with the Shenzhen Composite surging 2.89%, while the Shenzhen Component advanced 2.87%. The Shanghai Composite rose 1.72%. Stocks in Japan also saw strong gains on the day, with the Nikkei 225 up 2.38% and the Topix Index gaining 2.07%. South Korea's Kospi soared 2.88%. Meanwhile, Hong Kong's Hang Seng Index jumped 2.35%. Elsewhere, Australia's S&P ASX 200 ended its trading day 1.05% up. In the U.S. stock index, futures rose in the morning, with economic data and corporate earnings taking the reins as fears over the coronavirus outbreak eased slightly. At around 4:10 a.m. Eastern Time, Dow futures were up 158 points and indicating an implied positive open of more than 167 points, while futures on the S&P 500 and Nasdaq were also higher. Markets will also be lifted by the announcement from China's Ministry of Finance that Beijing is set to have tariffs on hundreds of U.S. imports worth around $75 billion. On the data front, jobless claims for last week are due at 8:30 a.m. Eastern Time, alongside fourth quarter preliminary productivity figures and unit labor costs. Rises in January private payrolls and services sector activity offered a further boost to investor risk appetite on Wednesday. And global oil markets futures rose for a second day on Thursday amid investor optimism over unconfirmed reports of possible advances in combating the coronavirus outbreak in China, as a sign fuel demand may rebound in the world's biggest oil importer. Brent futures rose by 98 cents to $56.26 a barrel in early trade, having risen 2.4% in the last session. U.S. West Texas Intermediate futures gained $1.08 to $51.83 a barrel after rising 2.3%. When we come back, we'll talk more on commodities market, but this time looking back home to domestic commodities market space. Just stay with us. Well, just before we talk about the domestic commodities, Angola state-owned diamond mining company Ndema EP plans to sell as much as 30% of its shares in an initial public offering in 2022. The sale is part of a government plan to increase transparency in the diamond sector and bolster production. Angola is the world's 7th biggest diamond producer. The move takes place as Angola seeks to improve its finances after signing a 3-year, $3.7 billion loan agreement with the International Monetary Fund. João Lourenço, who replaced José Eldorado dos Santos as president in 2017, is planning to privatize 195 companies or assets through 2022 in a bid to attract investment to Africa's 2nd biggest oil producer. And Ghanaian prosecutors have charged a former finance minister for alleged crimes that contributed to the collapse of one of the West African nation's biggest local lenders during the banking crisis. Kwabena Dufour, who served as finance minister from 2009 to 2013, and 7 other individuals were named in Wednesday filing at the Accra High Court on counts that include theft and money laundering. Dufour is accused of receiving 663.3 million cedis, that's about $122 million, knowing it had been obtained by means of a criminal offense, among other charges. Dufour, who also served as a governor of the Bank of Ghana from 1997 to 2001, was the founder Unibank Ghana Limited. The lender was declared insolvent in August 2018 after shareholders and related parties took 5.3 billion cedis in loans and other withdrawals without following due process. Wednesday's court filing also named Johnson Asiama, who served as a deputy governor of the Bank of Ghana until 2018, for granting a facility for the benefit of Unibank through another lender without following due process, causing losses of 150 million cedis to the state. The scale of Ghana's banking crisis came to the fore when the central bank started an industry cleanup in August 2017 to remedy years of poor governance and weak regulatory oversight. And now, back here on the domestic commodities market, coffee remains a big revenue earner in the world market, but Nigeria's production has fallen to less than 60,000 metric tons yearly. And stakeholders are calling for efforts to reposition the industry to enable the country earn more foreign exchange. While there is more demand for coffee, it is one of the most widely consumed beverages around the world, with an estimated 3.5 million cups of coffee consumed worldwide daily. Euromonitor International predicted that Nigerians would drink more than 1,000 tons of coffee this year. I'm one of those that love coffee. But well, let's learn more about what is driving coffee production in Nigeria now. Tobiloba Ogunpelu, one of the research analysts with financial derivatives, joins us now from the Stock Exchange studio. Hello, Toby. Good afternoon. Thank you for joining us.
Thank you for having me, Chimizi.
Now, coffee sales in Cameroon rose about 20% to 25,315 tons in the 2017-2018 market year. However, Nigeria's coffee production declined by 9.27% to about 1,556 tons. That was in 2017. What are the factors responsible for this lower production, and of course, what is the way forward for Nigeria?
Coffee is known as one of the world's favorite beverage, and we've seen that in Cameroon the price jumped by about 20%. The sales rather for coffee jumped by about 20%, and this is due to proper production management and funding in that sector. However, in Nigeria, production has been declining, and over the decade it has declined by about 23%. And the factors affecting production are: one, climate change. So we've seen that climate change has really affected thousands or millions of coffee trees. Then also, research shows that about 1 degree Celsius or 2 degrees Celsius increase in the temperature would affect the yield of coffee by about 20%. So this has really affected production in Nigeria. Then another thing is poor production and poor infrastructure, then also price volatility. So all this has really been affecting the input for farmers, and the output has really been low too for farmers. So farmers have been seen to shift from the production of coffee to other commodities. Then in Nigeria, to improve production, we need a transformative change all around in the sector, I mean in the agri sector. And by transformative change, I mean change from land preparation up to harvest and up to even transportation or exportation. So if there's transformative change in the agri sector, this will filter through to the coffee industry, and we'll see improvement in our production.
All right, let's look at the pricing. Now, the price of coffee is currently at $98.15 per pound. That's 22.78% lower than the price at the beginning of the year. What is responsible for this sharp decline, and how will this affect the performance of companies like Nestle as a major player in the coffee industry.
Okay, so for the coronavirus has really affected, or it has unsettled the global market. So it has really affected equities and it has also affected the commodities market. Then we've seen that China is a major player in this industry. Prices have been increased. Prices have been declining, for coffee. It has declined by about 23%, which is even a bigger dip when compared to the decline in the price of crude. So China is an important player in this market, and we've seen that even Starbucks, which has about 4,300 stores in China, they've closed down more than half of the stores in China. So this shows that the demand for this commodity is really low. So even though the consumption in China is about 2%, we've seen that the impact of this virus has really affected prices. And what this means is that as prices continues to decline, we'll see that as the demand rather continues to decline, prices will follow suit. Then for Nestle, that produces this commodity in Nigeria, that produces Nescafe, we would see that since the price has declined, we'll see that their import bill would also decline because they import a lot of their coffee from Ivory Coast. So we'll see that their import bill would decline due to the fact that the price of this commodity has been declining in the global market.
Now, globally, the growth in coffee consumption is projected to slow to 1.6% in 2020 from 1.9% in 2019. According to the Economist Intelligence Unit, I mean, they are the ones that released this projection. What are the reasons for the projection, and what does this mean for the price of coffee in 2020?
Okay, yes. EIU has projected that the consumption to slow to about 1.6 from about 1.9, like you rightly said. And the reasons they gave are, one, in developing countries where coffee is seen as a luxury item, we've seen that low purchasing power in that part of the country would filter through to the demand for the commodity, and this will really affect the prices. And also in developed countries rather, where they see this as a staple, where they see coffee as a staple, slow economic growth in that area, in that region, would dampen the demand for coffee, and these two factors would definitely affect the price of the commodity. So in 2020, due to the reduction in demand, we've seen the coronavirus then reduce demand from developing countries due to less purchasing power. Due to all these factors, we'll see that the demand will continue to slow, and this will definitely affect the price of the commodity.
All right, thank you, Tobiloba, for updating us on that. Enjoy the rest of the day. And Morocco's unemployment rate dropped slightly last year to 9.2% from 9.5% in 2018, as heavy job losses in rural areas were offset by gains in towns and cities. Farm income hinges on volatile rainfall levels in the semi-arid North African country, pushing more rural people to seek work in urban areas, while 85,000 jobs were shared in the countryside last year. About a quarter of people aged 15 to 24 were unemployed, including 13.5% of young women and 15.7% of young college and university graduates. The rate of underemployment was stable at 9.2% in 2019. Informal labor abounds in Morocco, making it hard to produce reliable employment figures. And that's a wrap on the program. Thank you for watching. I'm Chimezi Obi.